guess what? Bidenomics has worked.
Bidenomics has been in the news, in the media, and it's on the government's website about how it's growing the economy from the middle out and the bottom up. But who does this actually affect, and who's the main focus?
Oh, it's focused. I have trouble even saying to myself my own head the number of years. I no more think of myself as being as old as I am than fly.
So what actually is Bidenomics? For real, because I didn't understand any of that.
Bidenomics is about building an economy from the middle out and the bottom up, not the top down. First, making smart investments in America. Second, educating and empowering American workers to grow the middle class. And third, promoting competition to lower costs to help small businesses.
So Bidenomics is a new definition for the president's policy and its effect on the economy. Now, it's also the main focus of a very intense debate about whether Bidenomics is a good or bad thing for the middle class and the economy. Introducing the two types of people on this debate. On one hand, you have people that support Bidenomics and say it's a good thing.
I'm still riding with Biden. Unemployment has been below 4% for the longest stretch in 50 years. Inflation is half of what it was a year ago. Wages are going up, beginning to outpace inflation. Combine this with the fact that Biden has added 13 million jobs to the economy in 2.5 years. Bidenomics, I think so.
And on the other hand, you have people that think Bidenomics is bad.
And I really want to be that person that reaches the other side, because Democrats, they're horrible at their jobs, right? They do a lot of shitty things, although I'll vote for them all the time.
You see, the state of the economy is so divided right now that was the same person. So in today's video, I'm going to share with you exactly what Bidenomics is and whether it's been a good or bad thing for the economy so far. And then I want to share with you how this has affected small businesses and of course investors, because there's been some new warning signs we have to talk about. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for Bidenomics. Let's start with the downsides, the negatives of Bidenomics, because that's how the majority of people feel right now.
The American public is not feeling it. Just 34% of Americans approve of Biden's handling of the economy in a recent AP poll that was released at the end of June. And only 20% of voters believe the nation is on the right track, though voters have not felt good about the direction of the country for over a decade. And Biden is trying to persuade voters that the economy is better than they think it is.
Now, there's a couple reasons why people feel the country is moving in the wrong direction, but arguably the biggest reason of them all is because the cost of living has gotten so much more expensive.
A new report in Fortune says many are cutting back on personal hygiene products like scouring shelves for cheaper toothpaste, and what they say is a troubling sign for the economy.
Just last week, the BLS released the latest inflation report for June at 3%, but the core inflation number, which is way more important, is still too high at 4.8%.
They're taking it out of your paycheck right now. The average worker in America last month, when inflation was only 3%, paid about $4.50 an hour in the hidden tax of inflation. Wow. So that's why people can't make it from paycheck to paycheck. That's why people are putting necessities onto installment plans, like groceries, for example.
To put in perspective just how much inflation is actually costing us, according to a public economist from the Heritage Foundation, whatever your hourly rate is from your job, subtract $4.50 from it just to pay for inflation alone. That translates to $750 per month or $9,000 per year of hidden inflation taxes. And that's the other major reason people are upset, because the American people feel misled. Anytime we think of prices going up, we think of inflation. So we're shown this chart, which shows that inflation is coming down. And it is. But what's not shared with the public is the bigger picture behind what the data shows. Because yes, it's true, price growth has slowed down, but prices have gone up and they have stayed up. In fact, prices today are higher than they've ever been before. Using the official data from BLS.gov, prices are up over 16% since President Biden took office. The price of all consumer goods is up close to 17%. And that's not just true of rent, food, and gas, but that's also true for buying cars. In fact, only 8% of new cars listed on the market cost under $30,000, which also makes this one of the least affordable times to buy a car in modern history. And all of this has had a huge impact on people's ability to save money. In June of 2022, for example, Bidenomics made the personal savings rate get to the lowest level since 2005. And it's affected people's ability to borrow money because interest rates have gone way up. And that's also created another major problem.
because we've got a real crisis coming here. There's no cash for small businesses. And when the Fed raises rates another 50 basis points, that's going to make it worse. So no, I'm not happy. And I'm in the real world talking to CEOs of small companies that are family-owned in America in almost every state every day. They're not happy either. So I'm not listening to that data, I'm dealing with reality.
Now this is a great example of someone who doesn't necessarily believe data from the government and Bidenomics, because even though data shows small businesses are supposed to be happy, Kevin says they aren't, and there's a major crisis coming. And here's the data that he's referring to. The Optimism Index, which measures how happy small businesses are right now, just reached the highest level in 2023. But Kevin's argument here is that the data is not showing the full picture, because it usually takes anywhere between 12 to 18 months for the economy to feel the full pain of higher interest rates. And the Fed has started to raise rates 16 months ago, back in March of 2022, when rates were closer to 0, and now of course the rates are up over 5%. Now 12 to 18 months from that point on puts us exactly at March to September of this year. So anytime between that time frame is when small businesses will feel the pain of the cost of capital the most. In other words, how expensive it has gotten to borrow money.
These rapid rate hikes that have occurred, unprecedented speed of these hikes, have put my small businesses, and I'm talking about companies with 5 to 500 employees, which represent over 60% of our economy. You know, if you're in the S&P 500, you have no trouble financing your business. You can't say that about small business anymore.
And just for context, this is how important small businesses are to America according to the Small Business Administration. They account for close to half of all the economic activity in the entire country, and they create about 2/3 of the new jobs that helps us stay competitive. But because they're not as big as the Wall Street corporations, they don't have the same buying power, which means usually they don't have the same profit margins, so they have to rely on getting loans to get them through, which right now is becoming really hard to do. Another reason people are upset at Bidenomics is because of jobs and how they've been reported.
Jobs, jobs, jobs. The private sector witnessed a big hiring spike last month.
A blowout, upside surprise on the ADP report.
I got 497,000. I got a double take number here.
Companies added nearly 500,000 jobs in June. That is double what economists had predicted.
Guess what? Bidenomics is working.
So once again, this goes back to not telling the whole story and not giving the full context, because the BLS gives out a lot of data about jobs, even going as far as comparing past presidents' performance with this administration's ability to create new jobs. Because according to the White House, there have been 13 million new jobs created under President Joe Biden, which is true, but it's also not the most truthful statement because it's leaving out a lot of context. And that's because as much as 90% of the jobs that have been created can be attributed to people coming back to work after the pandemic. And that doesn't exactly qualify as new jobs. That's just old jobs being recovered. And you can double check this for yourself by looking at the data from St. Louis Fed. At the end of 2020, when the president got elected, we had 142 million employed. Fast forward to today, and there's 156 million employed, and this is where they're getting that 13 million number from. But watch what happens when I extend the data to just right before the pandemic. You can see we had 152 million employed. So the truth is, yes, the president has created more new jobs while he was in office, but it's nowhere near the amount the White House would like for us to believe. It's not 13 million new jobs. If anything, it's closer to 4 million jobs on the higher end. And to give the White House credit, they actually have tweeted that most of the jobs were just recovered from the pandemic and that they created close to 4 million new jobs. But for every one tweet they showed the real number, they advertised that 13 million so much more, which is just misleading. But even that is not the entire picture, because even though there are 4 million new jobs, the amount of money people made in terms of the median earnings in that time frame are actually down when taking inflation into account. The president also claims that he's lowered spending and the deficit, which is not exactly true.
And all the talk about I'm a big spending Biden, I lowered the deficit. $1,700 billion in the first 2 years. No one's ever done that.
The real truth is that a lot of the deficit reduction can be attributed to the spending we did in 2020 with the stimulus when both parties approved $3.1 trillion of new spending. So fast forward to 2021 and 2022, when those programs expired, the deficit went from 3.1 to 1.4, which is a difference of exactly $1.7 trillion, which is where they get that number. So yes, the deficit was reduced, but it was something that happened automatically. And this is why people are losing trust and why they're upset at Bidenomics, because they feel like the truth is being obscured in the data and how it's being reported. Now, up to this point, I've only criticized Bidenomics, but I'm not a president running a country, so I don't know what I don't know, which is why I think it's only fair for me to highlight some of the positives of Bidenomics too, and here's what they are. First, headline inflation is down.
For f***'s sake, the Biden administration's policies have actually been tremendously beneficial.
Okay, for real, he actually said for fact's sake. That was just unnecessary censorship, and I stole from Jimmy Kimmel. But headline inflation is down to 3%, which is good. That doesn't mean prices are coming down. All it means is that prices are now growing at a slower rate like they're supposed to, closer to the historical average, which is 2%. Unemployment is also down. It's been less than 4% for a while now. In fact, you might have seen this headline that it's the lowest in the last 54 years, which is also kind of a weird statistic to claim as your own because it's not like the president has been in office for that long. But overall, it is a good thing because historically, the average unemployment rate floats between 4 to 5%, so anything less than that is good. I also want to acknowledge that investing $550 billion over the next 5 years on our infrastructure is a good thing. Studies show that this tends to have a positive effect on a country's GDP because it makes the country more efficient in the long term. Now, the next one Bidenomics likes to focus on is student loan relief and education. This is pretty controversial. Not everyone agrees that this is overall a good thing, but it is good for at least 800,000 borrowers because $39 billion worth of federal student loan debt will be canceled. And of course, we can't forget about how good the stock market and the housing market have done so far. The S&P 500, for example, is represented by this ETF, ticker symbol VOO, the golden benchmark that all investors try to compete against, is up 18% this year, which is amazing when you remember that stocks are supposed to return between 8 to 10% in a good year. So this is really, really good. Also, the housing market has been very, very steady, and in some markets, it's gone way up since the president took office. Now, all of that is good, but it also depends on who you ask. If you're asking a home buyer, this is very bad. If you're asking homeowners, this is very good. But you could also make the case that if we didn't have such high interest rates and high inflation, both of those markets could be doing so much better. Either way, the main takeaway for me is this. Politics can be really fun from time to time, but studies show that presidents and their economic policies like Bidenomics have very little to do with the overall economy. And most importantly, there's very little to no relation to how well your investments actually do. No matter who's in office, whether it's a Republican or Democrat, history shows the real winners are long-term investors. So focus on your own investment journey. I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks. Links are down below, and then go track them automatically with a spreadsheet linked down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes Wednesday. See you soon. Bye-bye.